So let's talk about Tesla, because right now, its stock is telling two completely different stories at the exact same time. You've got one story for the traders who look at the charts and see a massive opportunity, and then you have the other story for the long-term investors who are digging into the business and, well, they're seeing some pretty serious challenges. So, which story is the right one? Let's get into it.
We're going to start with the trader's perspective. And honestly, this quote from Jeff deGraaf at Renaissance Macro just sums it up perfectly. He takes one look at the stock chart and sees something really clear, a powerful, bullish signal.
All right, so let's unpack what he means. For technical traders, the story isn't about the cars, or the competition, or Elon's latest tweet. No, it's all about the chart. To them, the business fundamentals, that's all just noise. And right now, that chart is telling a very, very optimistic story.
So what exactly does a breakout look like? Well, for about 4 months, Tesla stock was what traders call dead money. It just wasn't going anywhere. That's a consolidation period. But then, boom, it just exploded with momentum, shooting up from its April lows. And now it's starting to climb higher. For a technical analyst, this is a classic, textbook signal that something big could be happening.
And the potential prize here? It's huge. We're talking about a possible return all the way back to its previous all-time highs. So you can see why traders are excited. The logic is simple, and the upside looks incredible. But that's just the story the chart tells. The story of the actual business is a little more complicated.
And this right here lays out the core conflict perfectly. On one side, you have the technical picture screaming buy. You've got the breakout, the momentum, the potential. But on the other side, the business fundamentals are flashing all these warning signs: intense competition, falling deliveries, pressure on their profits. It's a classic Wall Street tug-of-war.
Okay, so let's switch gears and really look at that other side of the coin, the business realities that are causing some serious concern for investors. We're not talking about charts anymore, we're talking about cars, competition, and cash flow.
The first major headwind is something called pricing power. For years, Tesla could basically charge whatever they wanted. But that is changing, and it's changing fast. The market is getting flooded with intense competition, which is forcing Tesla to roll out cheaper models just to stay in the game. And here's the problem. Cheaper cars mean thinner profit margins. That's a real worry for anyone investing for the long haul.
And if you want just one number to understand what this competition looks like, here it is: 800%. That's the mind-blowing increase in UK sales for their Chinese rival BYD. They aren't just catching up. In most of Europe, they are now beating Tesla. This isn't some distant threat on the horizon. It is happening right now. And of course, that competition has a direct impact. In 2024, for the first time ever, Tesla's global deliveries actually went down. And with another 10% drop expected this year, it raises a massive question. For a company whose entire valuation is built on the promise of explosive, non-stop growth, what happens when that growth stalls?
So you've got the trader's dream on one side and the investor's dilemma on the other. How on earth do you make sense of that? Well, for the true believers, the answer is to look past all of this short-term noise. Look past the next quarter, even the next year, and focus on a much, much bigger long-term bet.
You see, a lot of the long-term bulls, like the folks at Barron Focus Growth Fund, they argue that looking at Tesla as just a car company completely misses the point. They say you're looking at this all wrong. They see it as an AI company that's building what they call advanced real-world AI technologies. The cars, they're just a beginning.
And this is the roadmap for that future. It's basically a three-part plan. First, you've got the highly anticipated robotaxi network. Second, they need to unveil new, truly mass-market electric cars. And third, and this is the part that feels like it's straight out of science fiction, scaling up production of a humanoid robot. And look, this isn't just a fantasy on a PowerPoint slide. After a decade of work and billions of dollars invested, Tesla has actually begun a limited commercial rollout of its robotaxi business in Austin. Now, it's a small step for sure, but it's a real tangible milestone that shows this long-term vision is finally starting to become a reality. And you know who's noticing this progress? Wall Street. You have analysts at places like TD Cowen recently boosting their price target for the stock, and not by a little. They went from $374 all the way up to $509, and they specifically cited this AI momentum. It's a huge sign that at least some investors are willing to bet on that long-term future. This quote from the Barron Fund really just captures the massive ambition here. They don't just see the robotaxi as a new product for Tesla. No, they see it as a transformative shift for the entire auto industry, one that could open up a gigantic new market. The stakes really could not be higher.
Which brings us right back to our central question. When you look at Tesla, what do you see? Do you see the chart, the momentum, and the perfect short-term trade? Or do you see the fundamental headwinds, a car company under some serious pressure? Or do you see the very early stages of a long-term AI transformation that could change absolutely everything? That right there is the puzzle of Tesla today.